Thank you. Secretary Geithner, how are you?
Nice to see you.
There was in '08 the agreement for the senior preferred stock purchase agreement that was worked out between your predecessor and the conservator at the time who worked on behalf of Fannie and Freddie. And my concern, is that if you took a step that would violate that agreement, the original terms of it, it would deprive the Treasury of obligated funds. It would unnecessarily absolve the two institutions that I think were really at the heart of a lot of the problems in the collapse of the housing bubble. And I think that there's an opportunity here to stay the course, but I read yesterday in the Wall Street Journal that executives from Fannie and Freddie were trying to reduce the size of the dividend that's paid back down to 5%. And I was going to ask you if you were aware of any conversations between Fannie and Freddie or their conservator and any Treasury officials on that subject. And I was also going to ask you if the administration would support a reduction or elimination of the dividend payment, because, I frankly think that would be the wrong message to send. I say that because Fannie and Freddie had such a powerful lobby up here, and you and I have talked about that before. I know that the Fed felt the same way, that they were leaning in and basically pushing policies that in many cases created systemic risk. There was that perception, and that it was impossible really to counter the weight of Fannie and Freddie here in the Congress. So if they are now communicating again to change an agreement, and that at least was reported in the press, I would want to know, and I'd also want your reaction to it, Secretary Geithner.
Well, I'll tell you what we're going to do, but of course we have to work with the conservator, with the FHFA in this context, which is the body Congress gave the authority to oversee these institutions. We're going to make sure that we wind these institutions down and that we do everything we can to minimize the ultimate losses to the taxpayer. Those things are what's going to guide our decision. So we will look at any suggestion from the FHFA through the prism of does it support those two objectives. So any proposal that is designed to keep them in existence for the long term, we will resist. Any proposal that carries the risk of increasing the ultimate loss to the taxpayer, we will resist. And I think you're right to highlight the risks that we saw in a system where you had this combination of private equity holders able to benefit from a guarantee,
right,
able to prevent effective regulation, and that's something that we are not prepared to preserve for the future.
I appreciate that. I will go to a second question I have, and that is, as you look at the financial crisis we found ourselves in, you have recognized that there was excessive investment in the mortgage market, which helped facilitate, as I think you said, speculation. What 30% of the homes at one point were people, basically speculating on homes, flipping homes. Do you believe there was a perception by investors, in addition to that the housing market was too big to fail, basically, at the time?
I don't know. I think government policies encourage distorted investment decisions, encourage too much investment in housing, and I think that the market operated absolutely with the perception that Fannie and Freddie were too big to fail.
Okay.
The market as a whole, as you know, banks, credit rating agencies, investors did not make decisions on the expectation that housing prices would fall materially over time, and that mistake pervaded private decisions across the country as a whole. Nobody expected or planned for the possibility you'd have a crisis where house prices would fall this much, and that mistake itself was what caused the crisis.
And we concur, but it sounds like from your testimony, your preference would be basically to not have, government intervention so that you don't, or if you had a limited level of government support in good times you could be in a situation where you'd have in place a mechanism to expand and support the market in times of stress. Now, my concern about that is that if you believe there was a perception that the government would prevent the housing market from a downturn pre-bubble, why would we take steps to compound that perception going forward? Because you see that it does send that message again.
Now, I think there is a risk of that, of course, and I think that's one reason why you have to be very careful in defining any role for the government, even in crisis, because, again, the risk is you create exactly the same types of problems that led to excess risk-taking in the boom. But, again, just living with the scars of this crisis, look what we face in this crisis. You have to have the capacity, in extremis, to protect the economy from broader damage caused by a catastrophic financial failure. You have to do that. It is the obligation of government to do it. And one reason why this crisis was so deep and so traumatic was we came into this crisis without the tools necessary to protect the innocent in this context. So whatever we do, we got to make sure we're preserving ultimately a better set of tools to, again, protect the economy, all businesses, the innocent victims from the collateral damage that a severe crisis can come. Of course, if you do that badly, you'll make future crises more likely, and that's why this is so complicated.
Thank you. Mr. Velasquez?